Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's recap and look ahead. So here we are, what is it, Thursday before a big holiday weekend, end of the quarter. I'm not going to get into the ending numbers except for everyone knows what happened in the past week. You had a huge down move on Friday and Monday, and then basically we recruit the entire thing. So, what is that market? So what's the market telling you? What is it telling us? First of all, you can't have an opinion. Right? If you started buying a little too early last Friday, who knows, you might have capitulated it out on Monday. If you said this is a dead cat bounce, we're not getting above 2025 in the SPX, let me get short here, and you shorted the rest of the week, you could have got blown out. So, you had to be real flexible, and, there definitely was money left on the table across the board. And everyone's thinking in their head, what could they have done better? What did they do wrong? Did they lose more than they should have? Did they, make less than they could have? All these things are going to be going on in your mind. So the best thing you could do is maybe, get a journal and write down all the things you think you did well and all the things you think you did wrong. So this way, next time we get this kind of movement, you learn from it, you develop your inner voice, and you listen to it. If you look at the chart now of the S&P, still, in this range, okay, this is your 2-year range, okay, and a lot of people, including me, were like, why couldn't we break out, here and have a big move like this from here and up? Didn't happen. Then here, a lot of us were thinking along also, didn't happen from there. So now all we did, in actuality, is come in and, test I'd say the bottom third or the top third area of this range. Okay, so we're still hovering in this area, and now, we're doing it kind of from a higher platform. So if the shorts had control, okay, which they could have, first of all, they probably wouldn't have let the market reclaim the 200-day. Then it would have stalled yesterday right around here, because this is where I think most traders probably started to short the market. This is where I started to fight it, because, I did not go home long, into the close. Okay, I actually was trying it here and didn't work. I got long on the gap up on Tuesday and pretty much stayed long all day. And then I thought I was doing a good job by selling my longs into yesterday. So then into this, I started to anticipate. I started to say, you know what? We just came from below S&P Cash 2000. I don't think it's going to get above this spot. So, selling into this 2050-ish area made sense. That was part of the target. And I'm like, between 2050 and 2060, I should be able to get a cute short. Well, didn't happen. So, it basically got me out of my stops yesterday. And then today, when we traded around it, didn't make much. But better than if I started shorting it here and kept shorting it this whole way up and, and capitulated that at the end. Because, who knows, with a new month, new quarter, July, first is historically one of the best days of the year, and we're right back into the upper end of the range. So you just, anything could happen. So at this point, where are we now? Because that's what everyone's kind of saying. What kind of pattern do we have? It's hard to really tell the kind of pattern. This could look like a inverse head and shoulders, where you have the left shoulder, the head. This could be, a very sloppy right shoulder, and then here could be the neckline again. Do we pause first next week, or was this window dressing? I would say thinking about it, because I'm not going to be on doing my call tomorrow. I'm going to be in Short Hills. I would think now holding above here or holding above this spot for a few sessions, like here. Now let me get rid of this. So if we were to hold above this area, okay, in the first week of July into earnings season, we could be set up for that move. Do we go straight up from here through it? I don't know. I've seen crazier things. At this point, the oscillator was minus 60 here, and now we're plus 33. So, if we can go minus 60, why can't we go, plus 60? We'll see. So I wouldn't have too much of opinions. But if, you have a big portfolio on, there are traders on the VTF, like Sperling, I know has 6, 7, 8, 9 longs, and he's been massaging them through this whole time period. And I would say at this point, with the market up 3 big days, and if you're in the mood to do it, you could have maybe a short, in the spiders, okay, as a hedge, if you have 6, 7, 8 longs. So this way, if you happen to open down 8, 9 handles tomorrow and your stocks are down, maybe you buy more of your stocks and then cover some of your hedge, and then we rally back up. You put on more of the hedge again because you just covered in the hole and you just bought stocks in the hole that went back. You sell some and you now massage a portfolio approach. The only time we go in portfolio approach is when we're above the 8 and 21-day moving average. If you look at the chart, we took back the 8 and the 21-day right here. So now we are back above the 8 and 21-day moving average. That means the market, now the bulls could prove that momentum is here to stay. So if that's going to be the case, we probably hold above this 2067 to 2070, which would be 25 handles or 25 handles lower, which would be nice to pause and digest here and let some stocks build. So the question is, what charts and what stocks would you build, or would you have an active portfolio with? Well, one of them, Amazon was the first stock this week to have a big move, and it's not that overbought now. Okay, here was your move at the 50-day moving average, came back up. Now it's back above the 8 and 21-day moving average. So I don't know how the market's going to do it, but pre-earnings, maybe it goes for a run to show that high beta tech can have a little bit of power. So if you have the wherewithal, this just digest it for 2 days, maybe you could be in a little Amazon, and then if it goes above this, intraday we can get a good day trade, but if it gaps above it and you don't have any, you might be upset. So this was something you could potentially be in a little bit of. Talking about other stocks, I know, I'm just pointing to something else. If you had to, something on Twitter, to me looks like it's going to go above, this 1710. What is this? Right here. So if you're looking for something just to hang on to and see if it can continue to go, it's above the 8-day. We had a decent trade here. That's why Sperling's involved in it right now, and you could buy it. It looks like it's hanging in there, and you can get a trade, or don't have it, and then hopefully, if you get a high volume trade above 707, you can grab it. But if you're worried about not being in it when a trade potentially triggers, you get in some. This ACIA I went over in my morning call today. I think this is something if you could handle some risk. Okay, this is hanging in there. It's a new issue. It's trying to prove that it could, be okay and go and. Who knows? This thing at some point could trade over highs. If you can handle a swing trade, this in a different end of a different spectrum looks pretty good. If TWLO today, I talked about in my note, was a great short, and then it was actually bought. Okay, first thing it did was get above this spot, which was a good trade for some. I know Sperling actually had it overnight, and then today was a great short. And then guys on the site, when should we be buying it back? I was like, well, if it's any good, it probably holds above here or 50% of yesterday's bar, and that's where it held, and now you'll see it go sideways, and that's something to watch and trade. Guys are asking me if Facebook is something that you can hold. It's not really giving you much reason to hold it. I did have it long. It was one of my stocks that I went with on Tuesday, and now it's kind of hanging in there. Maybe with a little bit of time, it could then get above this, but I don't think you have to be in it. Again, especially considering we're trying to figure out if the market's going to hang in there after the quarter dresses maybe get taken off. Some are actually in BABA. BABA actually has a nice pattern. BABA, in a few different ways. I know it's been pretty horrendous to trade, to be honest. But overall, if you look at the pattern, okay, it's very tight. If it gets above this, is definitely a big short position in BABA. It's been under accumulation for a while. It can go. So if this is one of your, portfolio stocks, it does seem as if it gets above the 80, 82, it can get to 85 plus. Some guys are all excited because look what NTES did. NTES, I'm not saying it's obviously a different kind of stock, but it's a Chinese ADR, and look at it just made new highs. It went nuts. Some guys caught it, some guys didn't, but this perked back up, went back above the 8 and 21 day after breaking this flag type pattern, and then gapped above resistance, took out this resistance, and now it's at highs. So maybe something like NTES would start to get others interested in other Chinese ADRs that might look good. There's not many of them. Let's look at BIDU. BIDU typically goes when the market goes. It hasn't done anything in a while, so maybe at some point this gets a little bit better, okay, and it's trying to a little bit. It's not great, but sometimes, this is probably something I wouldn't hold on to. I would just wait to see if it can go, and then get it for a trade if there's volume there on a particular day. Guys want some bank exposure. Banks kind of just rally back into resistance, so it's probably not the time to put on some bank exposure. But actually, yeah, just from support, kept the market going. I don't think you should chase the banks here, but who knows what's next there. Goldman Sachs had a strong day. It's a broken name, very broken. But if this thing or the banks really, want to act better and just come back up, the 200 days all the way up here. So I wouldn't just recommend holding Goldman, but you could trade it a little bit. It's, 4 days up. See, that's a problem, guys. The problem right now is the market's just had a huge move. So you start buying things today, or if you haven't been in things, through it, or you haven't massaged your positions, it's hard to do much now without some kind of burn off of the overbought condition. Like I just said, we're plus 33. So maybe there's some room to the upside tomorrow, but then, if you're positioning now, you're going to be positioning, into maybe having to hold into a pullback, which that's fine. Some people, the people who had the most success didn't do a thing with their 10, 15, 20 stocks and, held their nose, went underwater, and maybe they went away for the week. I don't know. But that's not what active traders do. If you're also a long-term trader or a long-term investor, this is why I showed you this pattern. And I tried to do it when, all the doomsday guys were out, like Mark Faber. I went on with him, not him, Peter Schiff, and he was talking about how he was declaring victory that the world just ended, okay, and basically said that investors have to get out of the market. And I said, how could you say that responsibly? You've been bearish for 10 years. That means you've been bearish, since probably here I've been paying attention, okay, and you're declaring victory, Monday. But anyway, if you're a long-term investor, okay, you put money in every month, okay, even if you put money in for the first time right here in 2000, saying, okay, I think, what it was 16 years ago. So 16 years ago, you were, just say you were 20, just started your job, and you're like, wow, I'm going to start putting a 401k in, and you went here. Holy cow, look what just happened. Okay, but you did it every single month during that time period. Then, oh, look at this, I'm feeling good, I'm looking at my statements. Then, pow again. Okay, everyone says, get out of the market, Armageddon. And you said, no, I'm in it for the long term. I've only been investing now for 9 years. I'm from 22, just say I'm 31. And then kept going up, well, you're feeling good, and then boom, break out, and now you're probably at your 7% that the market historically gives you, and you're in there, and you have a nice account. You've been accumulating it for 11 years, and now for 2 years, the market hasn't done anything again. This lasted for 12 years. I don't know if hopefully this is not going to last for 12 years, because we'll be driving ourselves nuts. But at this point, you actually look a little closer. It looks like, you'd have your range that goes all the way down here. It now just held the upper end of the range, so it has a higher platform. So maybe from here, it finally breaks above this, and then everyone who's been accumulating stocks, in the S&P mutual fund or however they do it for the last 10, 20, 30 years, they're about to get paid. If they started here, okay, you haven't made any money yet, but now in the next move you do. Okay, so anyway, long-term investing is different than active trading. Because I remember during this time period, we were making fun of everyone who just were buying and holding, where you could have made good money on this ascending channel to the upside, and then you could have made good money short in this descending channel to the downside, and then again to the upside, and then again to the downside. I think my best year was here on that down move. And then, all of a sudden, uptrending, and this is when I started to talk about the road to 1700. Why did I talk about that? Because if we got through the double top, why wouldn't we at least get there? So anyway, lots of ways to skin a cat, or skin a dead cat, because it was much more than a dead cat. There's things going on everywhere. Oh, you know what? I wanted to show you the XLE, because we've been talking about that in my note too, about the out of performance. Obviously, not near new highs, and hasn't outperformed over the course of the past few decades. But recently, on an active trading basis, okay, just say let's show you a little bit more further. This is when the trend broke, and you could have gotten out when it got below the 200 day as an investor. Well, now, it's back above for the first time in a while. So now holding above this, would be good to get you out of performance for the second half of the year. I think that, the XLE could be in the game for, out of performance. If you were in it during this move and got out when this had this head and shoulders top right here, or would blow the 200 day, and it never came back above it, now it's actually acting better. And as far as actively trading it, we'll try and come up with active strategies. I list this every day in my note about levels, and you saw oil was down today, and this still hung in there pretty well. So actually something to watch. Also the Russell, lots of talk about an inverted head and shoulders pattern, and this just took back the 200-day, and I guess we'll see. Remember the last move? It went above the 2016 highs first. The Qs didn't do it. The bios didn't do it. The Russell did it. So most sectors broke below the May low. Just what was the May low? So just say if I showed you the spiders, here was your May low, and it broke below it, and then ricocheted back up. The IWMs never broke below the May low. So this is a sector that could give us some relative strength moving forward. I guess this is an inverted head and shoulders pattern here too. Left shoulder, head. This could be your kind of crappy right shoulder, and then here could be your next spot if the S&P wants to break above 2130. So something's shaping up, and all we could do is watch things shape up from a distance and then execute on them as it confirms it, or as it gets in motion. And recently a lot of things don't trade intraday the way we want it, and it's been sucks, right? Most of this whole week was a big gap up. So who likes to buy a big gap up? It was kind of easy, not easy, but it made sense to do on Tuesday because we still were so oversold. But then on Wednesday, if you sold into the gap up, it was hard to get back in towards the end of the day, and then it was hard to buy today's gap up. So the way these things happen sometimes aren't conducive and don't have the best setups. But we have to just adjust and not get frustrated, not revenge trade, and move on. So we have a big holiday weekend. Again, half a year has gone by. What I suggested in my long form morning call, just so you guys know, I have 2 morning calls. One's the Morning Call Express, 6 minutes, very general, goes out to the world. And then there's the Morning Call long form version that is also part of my note, that's part of Redler All Access, where I go into the nuts and bolts of just active trading strategies for the day. So if you didn't know that, go to the site, look at Redler All Access. It's a product that's very cheap in my opinion. It's like a few $100s for the year, not a few $100s a month, that could help you with your game plan. If you're listening to me talk this long and you're not a member of Redler All Access, you probably should get it. It's very low cost for what's in there. Every day it takes me about 2.5 hours to actually write it before it goes to editing because my grammar is horrendous. I write like a trader, but then it gets in your mailbox by 8:30, and have it at 8:30. You could read it, you could look at it. Takes probably 10 minutes, write a few ideas down. Maybe they match with your own, and then boom, you're prepared for the day. But that preparation starts with me at 5 o'clock in the morning when you start seeing my tweets hit the Twitter sphere. So back to wherever I was, which I don't remember because I don't use a teleprompter and I'm all off the cuff. Half year. People get depressed. People look back at the first 2 quarters. What did I make so far? You're like, holy cow, that's all I made? Or you're like, oh wow, did pretty well considering. Then you look at your blotter and figure out what stocks you traded well and you made money and what stocks you didn't. If you made money in high beta tech stocks names, great, stick with them. If you all of a sudden lost in the spiders but made a lot of money in Amazon, or you lost a lot of money in Amazon but you made a lot of money in Facebook, you look at why. Maybe Amazon is too spready. Maybe it's too expensive. Maybe you like liquidity. You like being able to get in, get out. So look at some things that you've done so you could objectively make some hard decisions on what you need to change moving forward into the next quarter or the next half year, because we still have a lot of time left. The market still hasn't done anything. I think the S&P now is up 1% for the year. If we do get a breakout above, there should be really good trading. There should be stocks participating. There should be patterns that trigger. There should be things that have follow through, and these are all things that make us a lot of money. It hasn't happened in the past 2 years often. We've had these streaky moves. That's about it. Whenever sentiment hits the highest to the downside, you've had to get long. Every time everyone feels comfortable and ready to roll, we've pulled in, and that's been very hard for momentum traders. We'll see if that changes. If it doesn't change, we'll have to keep trying to figure it out. In conclusion, it's Thursday. I don't know who's really working that hard tomorrow. We have a long July 4th weekend. I hope everyone has a great time with their family, their friends. Put a little fitness in there, watch some fireworks, do some barbecue, and do whatever it is that makes you happy because you deserve it. It's not an easy job we have here, and you have to blow off steam when you can. Oh, you know what? People wanted me to talk about the nugget. Now here I go again. Nugget, some guys are long overnight, and unless it's a trap, if this was a stock, it just broke above, closed above, and it looks pretty good. GLD also basically is holding above this prior area. Nice little bull flag. I would think that the metals, the GLD looks pretty damn good too. 8-day just caught up. So if you're in the metals, the trend is still strong, and it looks like it's setting up for another move. The TLTs, on the other hand, still hanging in there, getting a little choppier, but still above the gap. Had a little late day selling, maybe some reallocations, but it's still okay. I would be a little careful, but those are those charts that some people asked me to put on there from RAA. All right, I'm not going to babble anymore. Have a great night. Have a great holiday weekend. I'm in Short Hills tomorrow, so there's no morning call by me, and there's a very general note now with all the nuts and bolts and stocks, and then we'll pick it up again after the holiday. Have a good night.